Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, let's return back to the analysis of the euro currency. As you can see, as the euro Japanese yen, as the euro United States dollar has shown the appreciation during the previous trading session. But as this is the positive sign for the bulls, as this is a bit worrying sign in general, because I feel a bit uncomfortable that, as we have discussed in our research, that this is the first thrusting up reversal swing on the daily time frame after the long-term bear trend that starts right in the beginning of the year. So for the 3 months in a row, market hasn't shown any reasonable pullback. No even major 3-8 retracement. Only minor retracements. Now suddenly we have this upward thrust up, upward action. But there is no deep retracement yet. Since that moment stands against the odds, this is the worrying sign. It means that some trap, some surprise, something is near, somewhere around. Because I feel a bit uncomfortable that market hasn't shown still any downward ABCD retracement due to the momentum to the downside. It could mean either the very strong momentum to the upside, that is stronger than the previous move, or it means that this retracement should come in the nearest future. So somewhere it should stand somewhere around. That's why I'm not very sure and not very comfortable with this thrusting acceleration. Our target of the move to the upside, we have pointed around 132.50 area, because that is the triple of the harmonic swing to the upside target, and that is the 50% resistance of that swing. Euro currency likes to show the 50% retracements. That's why this area is significant. So 132.50 area. Also, you can see that we will stand very close to the daily overbought. Still, there are some moments to watch for in the current market. You see that this looks like nice bullish flag. So you can see thrust up, bullish flag. If you will measure the mast of this flag and count it to the upside, it will point to the area around major 618 resistance, 133.50 area, somewhere in this area. Well, but currently, since this momentum down is still strong and retracement could happen in any time, there is the exceptional and very important moment to watch for if you would like to take the long position. In particular, you do not want that market returns right back inside of this bullish flag. Because if this will happen, it will mean first that this is the failure breakout and that was the bullish trap. The second, it could be the starting moment of the deep retracement to the downside. That really could happen. Because sooner or later this retracement should come, because this is just how market works. From that standpoint, we should keep an eye on this price action to the upside. And what we see here on the 4-hour time frame. On the 4-hour time frame, we see that here is our pattern that we have discussed. This is the megaphone pattern, or some broadening top, and that in general and theoretically this is the reversal pattern. But to trigger the reversal to the downside, to treat it as the starting point of the reversal and the deeper retracement, market should take out of these lows. Only in this case, this is the confirmation point for this pattern. If market will break this level to the downside, then it means that market will probably show the deeper move to the downside. But the problem is that when the market will take out of these lows, the minimum target of the retracement, that is the 618 support around 129 area, will be very close to the breakout point. And probably this will not make any sense to take the short position just for that move for 40 pips down. That's why I have another idea to watch for on this 4-hour time frame. In particular, this is the upper body of the flag. Why this is important? First of all, due to the moments that we have just discussed on the daily time frame, because if market will return right back in the body of the flag, that will be not quite bullish action. Second, you can see that market now stands at the weekly pivot resistance one, and if market will returns right back, taking out of this confluence support, you can see we have two confluence supports on the following time frame. First one stands precisely in the upper body of this flag. Second significant moment is that here is also the weekly pivot point, and as market will start to move lower, the trend break-even point will start to creep higher, and we could say that probably trend will remain bullish only till this confluence support. So you can see this is rather strong cluster, support cluster, and if market will pass through it, it probably will mean that the market will show the deeper move to the downside. That's why I think that we could be focused on this level instead of that level, instead of the breakout of this low. Although this level is also significant, because you can see this is another confluence support. It's around 30.15 to 30.27. It's right here. But I think that the most important will be this area. That's why if you would like to take long position, then you could try to do this from this area. Your invalidation point will be slightly lower than this area, or you could put your stops below this confluence support. That's what Stuart Napoli calls the Minesweeper B in terms of the using confluence supports. Well, if you would like to enter short, in this case you should wait for the opposite move. I mean the breakout of this level, returning right back and moving below weekly pivot point. In this case you could try to catch the short retracement, for instance retesting of this confluence, broken confluence support, and enter short. That is major idea, because here I do not see any other patterns to watch for. So that's just a broadening top, no butterflies. If for instance we have the butterfly and that was the, for instance, target of the butterfly, that could be much easier, because we know where the stop is, we know what to watch for. If this is really a reversal, market probably could reach this area. But here is not the butterfly, that is broadening top. That's why it's a lot of nuances here on the euro currency to watch for it, and be very extra careful with these levels. On the hourly time frame we have the hint on the potential pattern, so we see this thrusting up, that's very nice. And here is could happen the Stuart Napoli double repo sell. This is not the brand bottom, because you can see very shallow retracement, market hasn't reached the significant support area. But that price action is not typical for the double repo, because when you're dealing with the double repo pattern, you would like to see the capitulation of the bulls, when the market trying to create new high or create it and then fail. But here is no second top. It's a flat, tight, flat, choppy price action. That is not the double repo pattern. Although theoretically we have the close below the 3x3, above 3x3, below 3x3, and above 3x3 again. And here is close below. So that is not the double repo pattern. But it doesn't mean that here market can't start move to the downside. It's in fact this is possible. This could happen. Well, as you can see on the hourly time frames, no interesting patterns. That's why all that we could do here is just watching for retracement down, if it will happen. So if you, again, that's been said as the conclusion, that if you are bullish and you would like to take long position, take a look at this level. It's 130.85, 130.94. That is confluence support, upper border of the broken flag. Trend will remain bullish only till that area. That's also weekly pivot point, so rather strong support. And you could place your stop rather tight, slightly below the weekly pivot point. I think will be enough. If market will pass through it, it means that market will probably show the downward action. And the retracement that we have just discussed, deeper retracement on the daily time frame, could happen. Thus, in opposite, conversely, if you are bearish, you should watch the breakout of this level. Stop opposite to the bull position. When the market will break it, then you could try to catch the small retracement on the intraday charts and enter on the short side of the market. That's the major idea, because currently I do not see any other patterns to watch for. That's just a single setup that I see here.